Hi, folks. This is Lee Gettess with the Market Sense for the week of February 8th, 2011. The charts I use are from the Trade Navigator software that's from Gettess Financial Technologies. Looking at the bond market, after this long sideways period we've had here on the weekly, we finally do have a breakdown, and it looks pretty legitimate. It doesn't mean they can't come back up into the let's call it 118.20 to 119 area and still break down hard. And it doesn't mean that it's for sure going to go a long ways. They could just, go down here and turn back up again. It could look like a false break when it's done, but it isn't showing any signs of being false now. The next downside target is around 116.20, but if you take the width of this range and they ought to at least go that far down below here. That's just sort of a rule of thumb chartists always use. And given the length of time they've spent going sideways, you could expect this move to possibly go, I don't know, the 112 area perhaps. It looks like this is a pretty major change, and I even on an extremely long-term basis, you hear chartists talking about them breaking a 30-year trend line. That's a 30-year trend line on the 30-year bonds, but possible big changes here, and we may see interest rates head in another direction, regardless of what the Fed tries to do with them. In stocks, of course, we have sort of the opposite thing. They just won't go down. They continue to go up, and I guess maybe they will as long as QE2 is in effect. They're up into resistance around 113.20. 13.20 this week. The red line here down below price and below the previous close is the 1300 area, and that's where you would expect them to go in a normal strong uptrend, and you can see they're clearly staying above that so far. If you look, the lower red line has not been touched since way back here in December. And that's kind of unusual. I mean, I know they did it back here for a while, but eventually they have to come back and give that a shot, even if they're going higher. And I would expect that to be occurring sometime soon here. Now, this week that's in the 1270 area. I'm not sure they'll get that low. And in fact, I think next week is the greatest likelihood that we see that. And it's moving up, so we'll have to see where it is next week. But what can you say? It's a trend up, and there's just nothing indicating slowing of momentum except the fact that volume has dropped off tremendously. Tuesday was the most anemic volume in quite some time. It's very unusual to have Tuesday have less volume than Monday. Mondays are notoriously low volume, but they did. They could be getting tired, could be time for a little turn here, but there's nothing to suggest that the trend itself is over. Whatever the next breakdown is, I think you have to consider it a buying opportunity. So that's what we've got for you today. Hope you can find something interesting to get yourself into and make a little money. Thanks for checking in with us. We'll probably come back again next week.